Hello value investors, thank you for joining me. Today I want to talk about PubMatic. Why PubMatic is interesting? We're going to talk about what it does, its growth rates, its potential, its cash flows, and then we're going to bring this all together and talk about its valuation. So my name is Michael from Deep Value Returns on Seeking Alpha. Let's get started. PubMatic is an ad tech firm. It's responsible for working on the supply side. So it's a supply side advertising platform. That means that if you're a publisher, let's say a News Corp or whatever, and you have some space, some digital space that you want to, on your websites that you want to monetize, you go to an exchange such as this, such as PubMatic, there are many, and you monetize that little window for a certain number of impressions. And you can do this on connected TV or mobile or whatever. It's just, there are many ways you can monetize this. What I find quite interesting is that this is a small company and it's doing something that's quite well because it's actually growing the stickiness of its platform. So last year in Q1 2020, its net dollar-based retention was 112%, and right now it's 130%. What that means is that the same cohort year over year, they've been able to upsell 30% more to the existing customers. So that's really great, right? So you're getting customers on board. Over the course of a year, you're selling more services to them. Great. Last year, advertising space as a whole, as you know, in Q2 was quite difficult. So in the graph here, you can see that for Q2 of this year, they're really just growing at a very fast rate. However, for the year as a whole, for 2021, they're still pointing to mid 30% growth rate. That's really compelling because it gives you a lot of visibility into the company. And part of the reason why the company is able to give such long-term visibility is that it has typically 1-year contracts with customers. So the company kind of knows who's going to stick around, who's not. So you get a company that's growing at approximately mid 30s. That's really, really attractive. And if you follow many companies in this space, for example, Magnite or Tremor, Brian, you'll see that many of these are kind of growing in the 20s, mid 20s to mid 30 range. So that's really something that's, fairly doing quite well. Now, at the surface level, its EBITDA nearly tripled year over year. Great, you'd say. On the other hand, its EBITDA, reported EBITDA, doesn't really take into consideration its capitalized intangibles. So its free cash flow conversion from its EBITDA level comes to approximately 66%. So it's not really converting that reported EBITDA level to very strong free cash flow. So that kind of, puts me off a tiny bit here. It's not a deal breaker, but it's something that I wanted to share with you. Next, the stock is priced approximately 10 times sales. So it's kind of middle of the road for this space. So Magnite is slightly more expensive, but it's growing a lot faster. On the other hand, Magnite is incredibly acquisitive, so it's diluting shareholders, taking on debt. So, I'm not a huge fan of that type of play, but, I just want to put it out there. A company I do own, and I for full disclosure, which is Tremor International. So Tremor was based in the London Stock Exchange and it's moved over to being dual listed also on the Nasdaq. That company is growing at approximately 30% also, and is also priced at approximately 10 times sales. So also like Magnite, it has very strong profitabilities. It's not as acquisitive as Magnite, but it's generally in the space. It's growing quite a steady clip. So I just wanted to kind of put it out there. The comparison to the trade desk, many people say, the trade desk is priced at 33 times sales. Yeah, but the trade desk is the largest independent demand side platform. So that's really a very, very lucrative business, and they have very high take rates, much higher than the rest of the industry. So I think that there is a validity. Not sure if 33% times forward sales is quite attractive enough, but the trade desk is on a league of its own. So any comparison then, I'm not sure if it's quite valid, because the likelihood of PubMatic turning out to be anything comparable to the Trade Desk is probably disingenuous. So anyway, just to wrap this up, the company's priced at 10 times sales. It is quite profitable. It's growing at a reasonable clip like the rest of the industry. So it is something to keep on your watch list. Having said all that, if you want to find out what stocks I own and why, come and check out my marketplace on Seeking Alpha. It's called Deep Value Returns. You're welcome to do a totally free trial to see if it suits you. Many people tell me, oh, I like investing, but I like the intelligent angle to it and this and that, but I just haven't got the time to do this level of due diligence. So I just say, okay, come over to my marketplace. I'll be willing to subscribe my marketplace, and I've designed it with that in mind for you as well. Anyway, see you soon.